there's a lot of companies out there that you've got to stay on top of, so meeting management is crucial. You know, the jockey in many cases is just as important as the horse they're riding, so it's knowing management, knowing, you know, getting some comfort with the business. It's finding businesses that, you know, can continue growing. You know, all the quality features people look for, you know, trying to find companies with some sort of niche product or service, barriers to entry, you know, long sort of runway in terms of where they can push that product or service into. So very cognizant of the quality features, and then obviously it comes back to what you pay for those quality features. So it's looking, you know, we pay close attention to where consensus is, what the assumptions are for consensus. We like to find, obviously like most other people, you know, growth companies that are still come upgrades. The last thing you want to do is get into a growth company that's going to disappoint, because you start getting that PE unwind. So look, it's interesting in small caps. A2 is a classic example, you know, of a stock that a lot of fund managers have done well in over the past 12 months. And A2, when you look at it's probably easy in hindsight. We did own it, we did do well out of it, but basically it's a niche product. It's you know, it's a premium product. I've been to China recently, and it's quite interesting, all the mother and baby stores and the prominence of the A2 product. It's always the highest paid product in those mother and baby stores in China, indicative of that premium product. You know, they've managed the regulatory risk, haven't put a foot wrong. I wouldn't say they were sort of almost by accident, you know, they've achieved what they have, but you know, they're a product that is benefiting from just what's happening in China. What's happening in China is basically it's moving from, you know, a country that's being driven by industrial production, so building things, building cities, to now it's transforming to a consumer-driven, you know, the middle class, the wealthy middle class. They want to spend on good things. They want to pay up for, you know, good imported product rather than the cheap Chinese product. So all those things have played into A2's hands nicely. So it'd be lovely to sit here and say, you know, we can find stocks that can, you know, go up multi times over the next 12 months. It's not always that easy. But what you would say is that if you look each year, I mean, there is always a number of companies that at least double in the small cap space. And, you know, what makes stocks double? I think it's quite simple. It's stocks that, you know, basically growing strongly, and, you know, usually they're not well, you know, covered by brokers, so they're being upgraded. So you've got strong earnings coming through, you've got upgrades, share prices react whenever the upgrades come through. And at the same time, as the market gets more comfortable with the story, gets more comfortable with the runway in terms of how long they can grow for, you get that PE re-rating as well. So you get strong growth, particularly when you've got upgrades, PE re-rating at the same time. That's why at the small end of the market, you can find stocks that can give you significant outperformance sort of in a 12-month period. And that's harder to find at the big end of town, because they're, you know, very much they're not undiscovered, and they just haven't got the growth that you've got at the small end, which we talked about before. So look, an example of a company that springs to mind that's happened to very recently, it's a company called Clover Corporation. It produces encapsulated omega-3 powders, and what's interesting is that a lot of their big customers are the infant formula players. It's a key part of the supply chain. They've been able to sort of get into that, supply the product, and have benefited accordingly. And, you know, as the market's discovered it, as it's seen the growth potential, PE's been re-rated. I mean, it's doubled since late last year. So, you know, it's an example of the sort of companies you can find. As I said, it's always nicer to find companies before everyone else, and that's what we spend a lot of time getting out there and doing. But that's the nirvana, trying to find those very high growth companies that can be re-rated at the same time. And, you know, since we've started the fund 3.5 years ago, we have found a lot of those type companies. So it's been good fun.